Hello, everyone. Welcome back to another edition of my morning series, the Forex Morning Mastery, dedicated to price action based technical analysis. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so very excited to be with you here this morning. It has been a phenomenal 24 hours, as in the last 24 hours, we took advantage of the poor CPI data that came in from the United States, resulting in a nosedive of the US dollar, and in fact we were able to capitalize on that move. Congratulations to everyone who has been part of this profitable journey. I'm very excited to be here with you this morning. So today it's another new day, and we are going to be taking another fresh new look at the financial landscape. In fact, using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action for ahead of both the London and the New York session today. Well, for those of you who are joining for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. And if you don't know what this is all about, well, as technical traders, we usually gather here every day, come together as a community and engage in follow-ups and reviews of our current positions, if we have any, and see how we can strategically position ourselves ahead of the London and the New York session. So this session usually kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of these valuable ideas we will be deliberating on today. Generally, my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us here, the better you will become in comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategy. So once again, I welcome you all on board. So with that being said here, we will be diving right into the business. But before I do, let me emphasize here that the Forex Morning Mastery is usually focused on the 1 hour time frame, which is our execution time frame. And for those of you who had not watched my video during the course of the weekend, which is always in preparation for the new week, again, I encourage you to watch that video, as it will give you a background knowledge of how we identify the structures we are seeing on the 1 hour time frame, how we go to identify our key levels, the major trend line, and of course the patterns we want to be using to guide our decisions for the week. The links are right in the description box of this current video, so you can check them out after the live session so that you can have a better understanding of what we are doing here. So with that being said here, I can see a couple of comments here in the comment section. Hello, Jonah Aruna, Gashi Asafa. Good morning to you guys. Glad to have you around this morning. I can also see Umejesi Kelechi. How are you doing today, Kelechi? Trust you are doing very well. Oh, you said it's your first time joining here. I'm very excited and glad to have you around with us. So I do hope to see more of you in the nearest future. So with that being said here, the next thing we're going to do right now is to run through our economic calendar. Of course, you know how we do it in this community. We know we take the fundamental factors very important, as these fundamental factors usually manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, we usually focus on high impact event from the economies that affects the assets on our watch list. And based on this week, based on the asset we are looking at for this week, we will be focusing on both the United States and the United Kingdom economic dockets. Now, for Wednesday, November 15th, we have a series of high impactful events both from these economies. And in fact, we already saw the CPI data coming in from the United Kingdom this morning. And in fact, it was a woeful data, as all figures we have here, both for the month-on-month, year-on-year, all came in below expectations. And as a result of this, we are going to be looking at how the GBPUSD chart is going to be reacting to this event. What is the immediate reaction, and how do we intend to capitalize on the next move? Remember, on the GBPUSD, we had a phenomenal 24 hours where we were able to scoop in over 1,000 pips in profit on about 7 positions, I think, on that asset. So we are going to be looking at how to do a follow-up detail on that one. Then moving on here, we have the monetary policy report hearing, which is coming up in about an hour from now. That is from the United Kingdom economy as well. We of course want to be looking forward to that one, as it will give us an insight into the monetary policy, the intended monetary policy of the United Kingdom economy. Then later on today, in about 4 to 5 hours from now, we're going to be witnessing the producer price index, which is coming in from the United States. And for those of you who don't know, the producer price index is released by the Bureau of Labor Statistics, and it usually measures the average changes in prices in primary markets of the US by producers of commodities in all states of processing. Usually a positive data is seen as a high reading, is seen as positive for the US economy, which of course will dovetail to a bullish momentum for the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the PPI, that is for the month of September, it came in at 2.7%, and we have consensus projecting another 2.7% expansion for this month. So we look forward to see what the actual data will be like on that one. Will it be just as expected, below expectations, or even beyond expectations? Then simultaneously with the PPI, we are going to be witnessing the retail sales data, which is usually released by the US Census Bureau and of course it gives us its measure the value in total receipts of retails and food stores in the United States. And in fact, this data here gives us an insight into the spending in the economy, which of course lets us to know how buoyancy the economy is at this point in time. Now, generally, a high reading is considered as positive for the US economy, dovetailing to a potential bullish signal for the US dollar, while a low reading is considered as negative. Now, if we look at the data we have here for the previous month, for both the month-on-month and the control group, we have 0.7 and 0.6% respectively, and the consensus projection for the month of October is way below the previous one at a deficit of 0.3, which is not a very good expectation in that regard. So we look forward to see how this is going to play out today, and of course whatever comes in here is likely going to be determining the direction, especially for the US dollar going into the later part of the week. So with that information gathered here, you know how we do it as technical traders. We do know that the anticipation of this event alone has a tendency of influencing the market sentiment, which of course will reflect on the chart as price action. So talking about price action, let's move right into the business. And as usual, the first asset we are going to be taking for today, hold on a second please, I need to sort out this noise here. So you give me about a couple of seconds and I will be right back with you. Thank you very much. So I don't know why every single time my USOILSPOT chart usually takes quite a while before it loads, but let's give it some time while I see it coming from Ika's diary. Good morning, Ikas. Trust you are doing very well. Glad to have you around with us this morning. I'm not sure what is happening here. It's taking a little bit longer than expected. So let me just reopen a chart and let's see how this goes. Okay. All right. I think it's on right now. So the next asset we are going to be looking at this morning is going to be the USOILSPOT, and since the beginning of the week we have been buying the USOILSPOT. We've been doing very well. Remember, as at yesterday's live session, we were talking about over 200 pips in profit on the US oil, and during the Asian session we saw a resurgence in buy pressure as prices attracted interest and drawing support from multiple factors like the latest data released by the International Energy Agency, joining the OPEC Plus, of course, to raise the projection of oil demand for forecast for 2023. Then we also had the announcement with recent commitment from Saudi Arabia and Russia to extend voluntary cuts until December of this year. And this has actually bolstered the oil prices at the beginning of the week. And I did mention yesterday that we had the OPEC Plus recorded a growth in production yesterday as a result of activities from both Angola and Nigeria. Now, this has increased the supply of oil in the market, and usually when we see supply and increase in supply, there is a tendency for price to drop. Now, in that scenario, with this understanding in mind, let's look at things from a technical standpoint. And before we go into the details, it's very important that we also take into consideration those who are joining us for the first time, so they could have a background knowledge of how we got to this point. Now, at the beginning of the week, we identified a range where price action was initially confined within the $76.75 level and the $76.35 area, giving us an insight into the level of indecision at that particular point in time. Now, in addition to that was the fact that price was sitting on a robust ascending trend line. Remember, we identified this ascending trend line at the beginning of the week, which captured the series of higher lows since last week, Wednesday. And for the fact that price action remained above that ascending trend line, it was quite reasonable for us to look out for buying opportunities at the breakout of the resistant line of that range, which actually happened. And in fact, we also added more positions at the breakout of the $77.50 area. And not until Tuesday as well, we added one more at the breakout of the $78.43 area, though we were taking out of all the buy positions during the New York session yesterday. But we also had the privilege of adding one more as we saw this move all the way to the upside. And I did give us an update for those of us who are with me on both my TradingView and Telegram platform that we should take advantage of that one too as well. And that gave us about 100 pips before the strong bearish momentum came in during the New York session yesterday to negate all potentials by the buyers at this point in time. Now, with the information we have right now, as at this point we have a buy position running, which is currently running in a loss. I did share an update this morning as regards to buying above the $78.43 area. However, if you look at the structure closely, you will begin to notice the emergence of a reversal pattern in the form of a head and shoulder pattern at this juncture in time. Now, in as much as the market conditions looking very bullish, there are still tendencies that sellers could come in, which could be as a result of profit-taking activities, as those who bought at a cheap price at the beginning of the week may likely want to be closing in some of their positions to see how before committing more positions on this one. Now, if you look at the structure following the impulsive move that started this week, you will see that price appears to be gradually transitioning into what looks like an head and shoulder pattern, which from a technical standpoint could be considered to be a very solid reversal pattern. And of course, you know how we do it in this community. Whenever we identify such patterns, we want to be projecting the neckline, which will be needed to validate the potency of that reversal pattern. And we have the neckline situated right here along that psychological level at the $78 area. Now, for this reversal pattern to be valid, we need price to break down, retest that structure to give us a confirmation to join a downtrend scenario here. Now, what are we going to be looking out for at this point? Now, I have a buy position running right now, which is currently running in a loss of about 26 pips, and the stop loss is just right below the $78 area. Now, if we get taken out of this buy position in a loss, we are still fine. We've been profitable so far this week, so we are just leveraging on the profit we are made. So if we get taken out of this buy position and price drops and break down the $78 area, I would like to see some retests of structure to happen here. Then this will give us an opportunity to join a downtrend move. Now, for me at this point in time, if price breaks down the $78 area, I will consider this to be a counter trend opportunity. Of course, you know, since the beginning of this week, price has been on a strong bullish move, and the fact that price still remains above our ascending trend line makes us to consider this to be a counter trend move. Now, if price drops and we continue to drive the momentum to the downside, please note that we need to be very, very careful and ensure that we move our stop losses accordingly to secure this position as price nosedives to the downside. And if price gets into the ascending trend line, which at that point it will be dovetailing to about 110 pips, kindly move your stop losses, secure this current position, and let's wait to see how the market will be reacting to this ascending trend line. Now, if price action begins to find buy pressure where it transitions into a reversal pattern, let's say double bottom structure for the sake of clarity, then we want to be getting ready for another wave of bullish momentum. However, if price drops down the ascending trend line, break it down to the downside, retest of structure, that will definitely welcome more selling opportunities at this point. So let's be very, very mindful of the structure. We need to mark it out on our chart so that whenever it happens, we can easily identify them. Now, in as much as we looking at the potential that there is a reversal pattern gradually unfolding on the chart, we still cannot ignore the potentials that buyers can still take over this market anytime. And in that regard, this area at the $78 area will be considered for any potential buying opportunities, as you will see here that since Monday, that is since the beginning of this week, this area had been a strong resistance for sellers in this market. So every attempt by sellers to break through has been met with strong resistance from the buyers, as you will see with these circles I annotated on the chart right now. And right now price action is gradually approaching that area. So if this zone around the $78 level persists and continues to push price to the upside, then it will give us a sign that buyers still have a say in this market. And if that is going to be the case, where do I think it will be comfortable for us to buy this asset? Well, in that regard, I am going to be using the $78.63 area as an area where I will be looking out for buying opportunity. As you will see here that since the New York session yesterday, the later part of the New York session stroke the Asian session, we saw how price action was confined within the $78.63 level and the $78 area to emphasize the level of indecision in this market. And of course, you know how we use flat channels. Whenever we identify them on the current market structure, we exercise patience and wait for either the breakout or the breakdown of the range to give us an opportunity to trade. Now, in this case scenario, if I'm looking out for buying opportunities, I would like to see price break out of the $78.63 area. Then I want to be part of an uptrend move. And in fact, we do have multiple levels that we will be using to maximize the potential of this bullish move. So we have one right here at the $73.35 level. Then we also have our key level situated at the $80 area, where we shall be looking out for more buying opportunities in this particular market. Now, there are two ways to which we can capitalize on this one. Well, first of all, let me state this, that we are still in a buy position right now, and it's currently running in a loss. If it so happens that these buy positions continue to the upside, then it will be a good news for us as well. But for those of us who are joining for the first time, then I will suggest that you exercise patience, wait for the breakout and retest of the $78.63 zone area before you jump into any position. But for those of us who are profitable so far this week, then we can afford to leverage on some of the profits we had made. So placing a buy stop order above the $78.63 level makes quite a lot of sense. So these are my views on the USOILSPOT for today, and I would encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. If you have any questions whatsoever as regards to my illustration, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. So I see a couple of comments here. Torres Master, good morning to you. Glad to have you around with us. Krishna Veni, namaste to you. Glad to have you. Oh, you're also a newcomer here. Glad to have you around with us. I'm really glad to have you here. Nahim Leaquat, good morning to you. Gold analysis, of course, we are getting there. Gold is part of our analysis for this week, so we are going to be getting there in a moment. All right, so just stay tuned in. All right, okay. So in the absence of no questions at this juncture, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. Alright, so the next asset on our watch list for today is the GBPUSD, popularly known as the cable market. And in fact, we had a very phenomenal 24 hours as we were able to scoop in over 1,300 pips in profit on this asset only, we had about 7 positions on this one. We had serious multiple entries. As you remember, we were accumulating buy position through the Monday, Tuesday trading session before we finally saw that breakout of the 1.23 area during the New York session yesterday, especially after the CPI data came in below expectation. And in fact, during the Asian session, we begin to notice some consolidation phase happen, which we will be deliberating on today. And of course, we also anticipate the CPI data from the United Kingdom, which is coming up, I think, on Thursday or Friday. We are looking forward to the CPI data. And of course, whenever we have a data like this coming up, we usually see market participants anticipate this event, and usually prior to this event, we usually see consolidation phases or retracement phases happen in the market. So we are going to be looking at the GBPUSD today to see if there are chances that we could be having some retracement moves today. Hence, we want to ensure that we secure all our current buy positions that we have right now. Now, the first thing I want us to do here is to, first of all, for the sake of those who were not part of our live session on Monday and Tuesday, let's quickly run through how the week started for us and how we accumulated the buy position in anticipation of this strong bullish move that started yesterday. And I also want to mention here that for those of you who had not watched my video on the GBPUSD during the weekend, please go there and watch it, as I did a top-down analysis from the higher time frame, giving you a detailed understanding of how we identify key levels, trend lines, and patterns on the chart, using it to guide our decision for this week. So if you had not watched them, the links are right in the description box of this current video. Check it out after the live session. There you get to understand how we got to this point. Okay, so right back into the chart. So right here at the beginning of the week, it was more of a consolidation phase as we saw price action trapped within a range that was between the 1.2322375 and the 1.22225 level. So this was a very beautiful flat channel for us, of course, and when we were, you know how we do it whenever we have this kind of flat channel, we exercise patience and wait for either the breakout or the breakdown of the range to give us an opportunity to buy or sell. Now, throughout the course of the early hours of the week, at no point in time did we see price break down the support line, so that negated the idea of even considering selling at all. So it was more of multiple breaks out of the resistant line at 1.22375, and in fact, for those of us who missed out on it, the market was so kind enough, came back multiple times to retest the structure, giving us the privilege to be part of that uptrend move. And since then, we have been buying the GBPUSD, adding more positions at levels that we identified during our live sessions. We have levels such as 1.22535. We also had levels at the 1.22710. We also added one more at the 1.22805, and finally yesterday we added the last one at the 1.2300 area as we rode that massive move all the way to the upside. It was a phenomenal week, and once again, congratulations to everyone who had been part of this profitable journey. Well, at the beginning of the week, I was projecting that the TP for this bullish momentum would be around the 1.25750 and the 1.25250 area, but as it is right now, we begin to notice some consolidation phase going on here, especially during the Asian session. So in that regard, for those of us who still have a buy position running at this juncture, you do want to be moving your stop losses accordingly, secure this current position, and if you would ask me, I will suggest that anywhere around the 1.245 area seems most appropriate to lock in your position at this point. And remember, while you're trying to move your stop losses, that we do want to be giving enough breathing space for price action to breathe. Now, with a well-secured position at this juncture, what is going to be our plans for today? Are there chances that buyers will continue the momentum to the upside, or are we going to be having a situation where a retracement phase can actually come in? Now, let's look at what is going on in this market, especially since the later part of the New York session yesterday. So I will just zoom into the current structure so we can see things very, very clearly. And if you look at the structure closely, especially for those of us who have been with me on both my TradingView and Telegram platform, you will definitely have gotten an update as to how we are going to be managing this position. Now, if you look at the structure, ever since price action had tested the 1.25050 level during the later hours of the New York session yesterday, we begin to notice some selling pressure around that area, giving us signs that buyers are finding a barrier around that level. And going into the Asian session, we saw how price action transitioned into a confinement within the 1.25050 level, and the 1.24800 area, which further gives us an insight into the level of indecision in this market. Well, the indecision that is going on right now, this is not coming to us as a surprise, as remember, we are looking forward to the data, events, economic features from the United States and the United Kingdom. We talked about that earlier, and later today we are looking forward to the retail sales data coming in from the United States. Then tomorrow as well, we are looking forward to the retail sales data. On Friday we are looking forward to the retail sales data from the United Kingdom. And usually whenever we expect or anticipate such impactful events, we usually see how the market participants anticipate them, and it usually comes as a consolidation phase or retracement phase of that move. And of course, you know how we do it in this community. When we usually identify flat patterns like this on our chart, it emphasizes the indecision. Hence, we exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. And if you look at this structure closely, you will see that price action had already broken down the 1.248 about a couple of hours ago, inciting the potential that we might likely be seeing a retracement phase anytime soon. And this could be as a result of profit-taking activities. Remember, quite a lot of people were part of this bullish move that started yesterday. And for those people who had bought at a very cheap price, will at some point want to be considering taking some profit off their position, which will usually reflect on the chart as a retracement. Now, the question here is, has the retracement phase started? And if it has started, how far will this retracement phase go? So if you look at the structure, personally, if I want to join a bearish momentum here, I would like to see a confirmation happen before I jump into a position. So I would like to see a retest of structure before I join any position here. Now, another thing I would like to emphasize on the structure is how the consolidation phase we have noticed here appear to have transitioned into what is looking like a reversal pattern in the form of a double top structure, as the inability of buyers to break out of the previous high is a signal that we are likely going to be seeing a downtrend move. Now, with this situation here, you know how we do it. We mark out the neckline next, and in fact, coincidentally, of course, the neckline of that reversal pattern shares a confluence with that support line of that range at the 1.24800 level. So what we are going to be doing now is, we already have a confirmation that we have a reversal pattern. For those of you who had sold below the 1.248, well done to you. However, if you had missed out on that one, I would advise that I personally am not yet in this trade yet. So if you had missed out on this one, I would suggest that we exercise patience and see if the market will come back, retest the structure, and after which continue selling pressure below the 1.248 will welcome selling opportunities in this market. So that is how we are going to be selling the GBP USD today. And for those of you who had sold, well done to you. I hope you have your stop losses in place. Stop losses somewhere right below, above the previous high, dovetailing to about 20 pips, 25 pips thereabout, is quite reasonable for this one. Now, how far will this bearish momentum go? Where is it likely going to go for today? Well, we don't know how far this is going to go. And one thing I would like to say here is that this move that we are taking here is considered to be a counter trend opportunity. So we want to be very, very mindful of this position and always be on standby to move your stop losses accordingly as price action move significantly in our favor. Now, remember yesterday we had an ascending trend line spotted here, which price action did break out of and retest the structure. So let's see if the market will get to as far as this area today. Maybe let's see how many pips move that is. That's about 150 pips to about 180 80 pips they're about to catch on that one. So let's see if the market will retrace back to retest structure in anticipation of another wave of bullish momentum. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates on how we are going to be managing this position. So at this point in time, those who had sold, well done to you. And let's see if the market will come back, retest. If it does, continue selling pressure, signs that buyers are finding it difficult to climb and stay above the 1.248 will welcome selling opportunities to the downside. Then another thing I would like to mark out on this chart, which will be of immense help in making us feel comfortable in our position, is the fact that we have a series of lower highs that we can work with for today after connecting the series of that connecting them together. So at this point, this trend line here will be playing a major role in guiding our decisions today. So as long as price remains below that descending trend line, we feel very much comfortable in the idea of selling the GBP USD. However, in as much as we're looking out for selling opportunity at this juncture, we cannot ignore the potentials of the buyers. And of course, you know how we do it in this community. We always ensure that we keep a balanced perspective to the market. The financial market is a very fluid environment, and for us to stay afloat in this condition, we want to be as dynamic as possible. So now what happens if price action breaks out of that descending trend line? Well, for me, if price breaks out and retests the descending trend line, I would want to see this as an uptrend continuation pattern. Now, to give a visual representation of what I'm talking about here, so a breakout retest of the structure will be welcoming the idea of considering buying this asset, and with a buy stop order above the 1.25050 area, we want to be maximizing the potential of this bullish move. So a breakout, retest, and continued buy pressure here will give me beautiful buying opportunities. And if price goes on to break out of the 1.25050 level, I will be adding more positions to my existing trade. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So this is how we are going to be managing our positions on the GBP USD today. Basically, our center of focus today is between the 1.25050 level and the 1.248 area. Please ensure that you mark out these levels and trend lines on your chart, as you will be needing them as a yardstick to guide your independent trading decisions for today. So if you have any questions, feel free to drop them in the comment section. As usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will move on to the next asset on our watch list. Whoa. I can see a handful of comments right here. Where do I start from here? Okay, all right. So I can see Ashraf Ali is asking here that price action and smart money, which is B. I want to assume you're asking which one is better, right? Well, for me, I would say this. Everything is all jargons. Everything is all terminologies that we use to name whatever strategy we want to adopt. But one thing I would like to say here is that I am an advocate of simplicity. So the more simple it is, the better it is. Nature itself is simple, and we as human, because of the nature of the human psychology, we always think that when we complicate things, then it will be better, or probably if you complicate things, then there is a solution will come at the end of it. But that is not the way. Now, what I usually use here is trend lines, key levels, and chart patterns, basically to identify my trading opportunities. And in fact, this These fundamental tools have been used over the last century in the trading community, and it has been used in the 1900s, the 1910s, 1920s till this moment, and it has been working. And one thing you will get to understand is, before you can understand the market structure, the basic things you need to understand is, what is the trend saying, what is the sentiment in the market saying, and do you have tools that can identify the sentiment for you so that you can be able to position yourself strategically for the next move. And if you have those fundamental tools, well, for me, that is okay for me. So personally, I wouldn't say which one is better, but what I would say is, make your strategy and your analytical approach as simple as possible. The more complicated it is, the more confused you will become. So that's what I will say on that one. I hope I do answer your question, Ashraf. How to remove fear when you are in trading? How to remove fear? Well, the reason why you are fearful is simply because you don't trust the strategy you have adopted. So the moment you trust the strategy you have adopted, there will no longer be fear. So this takes time. It's not something you can get over the night. It's over time. The more you do things over and over and over and over again. I used to advocate boredom. Boredom is usually something everyone runs away from, but in fact, boredom is what makes you become a better person. So the more you do the same routine over and over and over again, you begin to see where you are doing things wrong, and when you know where you are doing things wrong, then you'll be able to provide a solution to it. So to take away fear, I will just suggest that have a strategy, stick to your strategies through the losing time and the profiting time. Stay through with it, and over time, you will get to transcend that. I do hope I answered your question clearly there. And Ika's Diary made a profit on GBPUSD begin the week. Oh, that's great, Ika's Diary. I'm very excited about that for you. And thank you for the compliment. I really do appreciate. Thank you for the compliment, Kelechi. Thank you very much. Nahim Liakat, we will be attending to gold in a moment. All right. Kelechi is here, says, please, there is a content that I cannot true that explains how you mark up your. All right, Kelechi, I will advise you to check the links in the comment section, in the description box in this current video. I have the links to my videos on this asset for the new week right in the description box below. I encourage you to check them out so you can see how I do my top-down analysis using basic tools only, trend lines, key levels, and chart patterns to profile an answer to where price is likely going. So check it out, and you will be glad you did. Sriba says, I'm biased, should I close? Well, I already mentioned earlier that we want to be having our stop losses in place right now. Lock in your stop losses around the 1.25 area, anywhere around that area. Lock in your stop losses there. Give enough room for price action to breathe. We might likely be seeing an uptrend, and if it turns out to be a downtrend, we are ready to go. All right, so in the absence of no other questions, I want to assume that we are all on the same page, and in that regard, we will be moving on to the final and last asset on our watch list for this week. So the last asset on our watch list for this week is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, we've done pretty well in the last 24 hours on this asset, as we were able to scoop in, I think, over a 400 pips profit after having about 4 buy positions in this particular market. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we are going to be managing our positions for today. Well, basically, from an holistic standpoint, the bullish sentiment in the market still continues to hold strong capacity, as buying activity also was noticed during the Asian session today. And this trend is being supported by the ongoing US dollar selling bias, which has been fueled by growing expectations that the Federal Reserve will not be raising interest rate any further this year, based on the CPI data that came in yesterday. Now, will this be a fact, or will this be an illusion that will shake a lot of people out of the market? Well, when we look at the technical structures, we get to have answers on that one. But one thing I would like to say here is that despite the current risk-on mood in the market, which is typically seen as a headwind for safe haven assets such as the gold, I'm of the opinion that price may still continue to the upside. Now let's look at the structures from a technical standpoint and see how the week actually started for us, for the sake of those who are not part of our earlier sessions, and how we are going to be planning for today. Now, at the beginning of the week, it was a very simple setup we saw here. We saw the first thing we identified was this ascending trend line, and of course you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying that asset. Now, in addition to the ascending trend line, we noticed that price action was initially confined within the range between the 1,941.50 and the 1,934 area at the beginning of the week to emphasize the level of indecision going on in the market at that point. And of course, you know how we do it. Whenever we have a range like this, we do exercise patience and wait for either the breakout of the resistance line or the breakdown of the support line to give us an opportunity to either buy or sell. Now, with the situation we had here, though we had a breakdown of the 1,934, that was on Tuesday, and for those of you who are with me on my XAUUSD live window, we talked about how we need some confirmations before we jump into a sell positions, as we needed a retest of structure to happen, which of course never happened, hereby negating the idea of considering selling at all. Now, we positioned ourselves just right above the resistance line here at the $1,941.50 level, where we saw our first buy position for the week triggered. And since that moment, we have been buying this asset, adding more positions at key levels such as the 1,945, which was duly identified in our sessions. We also had another one at the breakout of the 1,948 level, and during the later part of the New York session yesterday, I also updated our chart, giving us another entry level at the 1,959 level. And during the early hours of today, for those of us who are part of my TradingView and Telegram platform, I also updated another level at the 1,970, which also has been broken at this point in time. So we have roughly over, let us see together here, how many pips do we have here on this one? So on the first position, we have about 290 pips running in profit. We have from the second position here, we have about 260 pips. And from the third position here, we have about 230 pips in profit. And from the fourth position here, we have about 120. In fact, it's over 800 pips, I guess, from all the positions we have here. And for those of you who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, the next thing we are going to be doing, you know how we do it. When price moves significantly well in our favor, we want to be moving our stop losses and secure the current buy position. And based on what we have here, I will be suggesting that anywhere around the 1,967 and the 1,965 area seems most appropriate to lock in all buy positions at this point. So move your stop loss to anywhere you feel comfortable around that area. And please, while you are moving your stop losses, please ensure that you allow enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying, or are there chances that sellers could come in at this point in time? Well, personally, if we look at the economic factors here, especially the geopolitical tension going on in the Middle East, I'm of the opinion that this kind of escalation usually favors safe haven assets such as the gold. And in a situation where majority in the market are already nailed it that the Federal Reserve may likely not be increasing interest rate any further this year, the attractive window in the US dollar is gradually thinning out, and in that regard, this might favor the gold to skyrocket to the upside. So in that regard, I still want to maintain a bullish bias on the gold. Now, how do we intend to maintain this? Well, let's look at the current structure from a technical standpoint. Now, if you look at the structure closely, you will see that price is back around the 1,970. In fact, it has broken out of the 1,970, triggering our fifth position for this week. Now, if you look at the structure here, yesterday during the New York session, we saw how selling pressure resumed around that area, leading into a consolidation phase. But the appearance of buy pressure during the Asian session gave a little bit more hope for the gold to rise again. Now, for the fact that price action has broken out of the previous high here, I'm of the opinion that we continue to look out for buying opportunities as long as price remains above the 1,970. Now, for those of us who had missed out on this breakout of structure, well, I will encourage you to exercise patience and wait for confirmations like a retest of structure to happen before we jump into any trend continuation to the upside. So this is what I will say here as regards buying the XAUUSD for today. Then another thing I would like to include to this chart that will make us be able to feel comfortable in whatever position we have here is the trend line I will be spotting around this area. Now, if you look at the trend line closely, you'll see how it has played a major role in determining the direction of price action. It was more of selling around this area before it was finally broken out of during the New York session yesterday, and we saw price come back to retest the structure one more time, further emphasizing the strength of the buyers at this point in time. So this trend line we have here is likely going to be pushing price further to the upside, and of course you know how we use trend lines in this community. As long as price remains above the ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying that asset. So as long as price remains above this level, we feel comfortable in our buy position. So we could still see something like this happen, price come back to retest structure, then you want to be part of an uptrend move. Now, in as much as we're looking out for buying opportunities in this market, we cannot ignore the potential that sellers could actually come in. We've had a very tremendous bullish move since the beginning of this week, and for those key players in the market who had actually bought at a cheap price may likely want to be doing some profit-taking activities, which could incite some selling pressure in this market. And in fact, we saw some signs here yesterday as to sellers trying to push price to the downside. And if it so happens that price action drops back down below the 1,970, breaking down that ascending trend line, then it is very likely that we will be joining a bearish move. Now, remember that we are not going to be getting too excited here, as we will need some further confirmations before we jump into a sell position, as the breakdown of the ascending trend line could still turn out to be a false breakdown. So what we are going to be doing here to feel comfortable selling is to wait for price to come back, retest the structure. In fact, what we want to see here is signs that buyers are finding it difficult to climb back above the ascending trend line, and which usually reflects on the chart as continued selling pressure below either the ascending trend line and the 1,970 to give us an opportunity to join a downtrend move. So the only condition that will make us consider selling this potential profit-taking activity scenario is to wait for a breakdown retest of that ascending trend line before we jump in here. But as long as price remains above the ascending trend line, we shall feel comfortable in a buy position. And if there are new setups that comes up along the line as we continue to monitor price action, trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So these are my views on the XAUUSD for today. So I encourage you to mark out these levels on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions, while I also do round off along the line. All right, if you have found this content helpful and useful in making your independent trading decisions, I would greatly appreciate your support by giving the video the thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. Thank you in advance for doing so. So I look forward to your comments, and you can also take that time to mark out these levels on your chart. All right, so I can see a couple of comments here. Kriba is asking me for my Telegram channel. Of course, you can see it scrolling at the bottom of your screen right now. The Telegram channel is there. My TradingView platform is also there as well, so you can check it out. Is a downward correction in the price of gold possible? Because it seems that the growth is starting to slow down. I think I just discussed that. I think this question is earlier than my illustration, right? I just explained that in detail. Every week. Okay, thank you very much. Ikes Dari just informed Kelechi of the routine here. Thank you very much, Ikes Dari. Ashraf Ali keeps asking again that what is, or is it, you asked that price action and smart money is better. I think I answered that question earlier. I will suggest that you rewatch this video. I did explain that video. I did explain it in detail that I don't have any preference, but I'm an advocate of simplicity. The more simple it is, the better for me. And I follow the path of least resistance, which is what nature usually follows. And I'm using tools, fundamental tools such as trend lines, key levels, and chart patterns for all my decision makings on the chart. And these tools here have been used over the last century, and it has been working. And any other strategy that comes in, or any other approach that comes in, is only an appendage of these fundamental tools. So basically, if you will ask me, I don't have a preference, but I can tell you for sure that the more simple your strategy is, the better it will become. More easier for you to be able to follow through with your plan, be easier to manage your psychology, your emotional imbalances whenever you are taking your decisions, of course, at every point in time. So basically, that's my own view here. All right, thank you guys. I really do appreciate that. All right, so I just dropped the link to the XAUUSD live window right in the comment section. I pinned it at the top. You want to click on that link, click on the notify me button so that you can get notified as soon as we come on live. For those who don't know, the XAUUSD live window was born out of popular demand from this community, where we come together to follow real-time price action on the XAUUSD during the New York session. So it usually kickstarts between 5 to 10 minutes into the New York session, and it lasts about 6 to 7 hours into the New York session before I round off for the day. So you do want to be part of that session so you can see in real time how we actually manage our XAUUSD trades in real time. So on this note, and in the absence of no questions, I do want to assume that we are all on the same page here, and in fact we are ready and pumped up to take advantage of any potential opportunity the market presents to us during the London and the New York session today. And for those of you who have joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you're done, well done to you. And I look forward to seeing more of you I encourage you to be part of the subsequent editions, as the more time you spend with us here, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So you are welcome and looking forward to seeing more of you. So for today, we were able to attend to three major assets, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And we were able to identify simple setups to strategically position ourselves ahead of today's trading session. So I do hope we marked out these levels, and let's allow the structures to mature before we jump into any positions. And always remember that it is adequate and appropriate of you to have a well-defined risk management strategy for every decision you are making in the market. Every decision, every idea is an educated guess until price action hits your TP target. So on this note, I wish us all the best of luck today, and I look forward to seeing you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.